p.m., just a little bit behind in the schedule today running from the meetings, webinars, and some client calls. So 3:30 p.m. It is May 6th. It's pre-FOMC. Big day tomorrow with the Fed. Unlikely to do anything. There's like a 97, 98% chance they just hold rates the same. Likely going to be a pause through June as well, per the CME Fed Watch tool. But we do have a lot of earnings on tap. There is some highlights coming out this week. We have earnings today after market: AMD, SMCI, ANET, and EA. These are some highly traded options. Wednesday before market, so these will be some interesting ones to see how we get a reaction before the bell tomorrow. Uber, Disney, VST, VRSK, ROK, CDW. And then after earnings, Oxy, which I'm looking at a trade on Oxy. I'm probably going to wait for tomorrow, maybe right until the close. I've got a nice little trade lined up for my newsbreaker service on OXY. Hopefully it still looks valid tomorrow. Fortinet, which is FTNT, Axon, and SWKS. Thursday earnings, we have a decent amount as well. TAP is one I'm watching. WBD I'm watching. COP is Capital One I'm watching. Aftermarket, MCK, MCHP, EXPE, TKO, which I actually took a ratio spread on that one and took some profit out for April. That is the mix of, I think, UFC and WWE. I know it's a lot of acronyms, but TKO is basically like an entertainment business now with the merger from WWE, and then LNT. And then we have, that's kind of it. Next week, we have some other notables. Walmart has earnings next week on the 15th. So anyway, earnings season, we have over 1,255 earnings this week. Some of them have printed. We had Palantir today. I think they dropped a little bit. They were sitting near all-time highs. Yep. So we had a pretty decent gap to the downside. 123 down to as low as 105. Palantir from yesterday's close is down about 11+%. Let me actually check and see PLTR. What was the expected move? So about a 20% move, and it was down about 11%. So it still didn't move the average. Yeah. That would have been an interesting one to watch. We actually had a lot of like 20+% earnings on Palantir for the last 5 or 6 prints. So it's still below what the expected move was. So that would be, if you're a premium seller, that'd be a pretty good one on Palantir, although you did have a pretty nasty drop. Right now, I'm actually wondering, let me actually check in Palantir right now and see, post earnings, if there's something to grab from this, maybe going out to the monthly, maybe actually going into the next couple of days. So we're looking at a plus minus $6.33. Ivy rank is 38.8, 6.35 divided by 109.29. So about a 5.8% move. And that's kind of child's play considering we can go 20%. So I don't think I want to step in the way of some follow through just in case there is. Let me see here. I think everyone's chiming in on free group chat. Give me a second. Oh, I'm here. Okay. So, I mean, Palantir could be an awesome little range trade. I would be kind of hoping that we have a follow through to the downside. If we do, probably scooping up some Palantir down here. I know that the market was kind of breaking in April, but I don't know, maybe some dynamic support, maybe some ratio spreads. I don't think I'm going to get ratio spreads below 65, but I'm going to sure look at it right now. Let's go Palantir. I know it's a pretty expensive stock right now, so let's go PLTR. Have a look. I mean, looks pretty good. It is a very high PE ratio, like ridiculously high, but it just keeps getting better and better things. This is what I don't love: current price versus fair value. So I'd only be interested in actually owning shares of Palantir if I could own it for, let's say, $65 to $60 with the upside targets of 120 plus. Now, that might be a creative option trade versus trying to get into the weeds with this post earnings announcement. So maybe if I went out to the end of the year, let's go to January 2026 and see what a $60 put looks like. I mean, this isn't terrible. Would I be willing to own some shares cheaper if I did a 60 and a 55 and a 50? I mean, I'd be willing to own some shares. I know there's risk on that trade. Would I be willing to own 300 shares? Would I just be willing to 100 shares? Let me see something here. If I did, let me delete these. Let me look at a ratio spread. Ratio spread is probably going to offer less credit than just cash secured puts, obviously. But if I do, let's say a 60 by 57.50, I mean, that to me is not a terrible trade. It's a $300 income trade. I'd own 100 shares. I'd own the price at, let's see, 57.50 would be the assignment minus 2.90 minus a profit trap of 2.50. I'd own shares of Palantir at 52.10. And off of those highs, 52.10 would be around a 60% discount, 58% discount. Obviously, if Palantir goes to fresh all-time highs, then I don't think that's a bad trade. So I don't mind it. I really don't mind it. I mean, I've got to be willing to take on the risk of the rest of this year. I've got to have some confidence that the market is still going to have a chance to get to all-time highs. Palantir is somewhat resilient. If we come down and have a correction, that's fine. Covered calls. If I own the shares and I do a 30-day covered call, I mean, we're still getting. This is crazy, by the way. You're still getting like $7 or $8 for a 30-day covered call. So the ability to repair a stock like this should be pretty high. I think I'm going to take this trade. So let me see if I can get 60 by 57.50. How much different would it be if I went down a strike? 255. I still like pulling in $250. I'd own it even cheaper. I'm going to take this trade. I'm going to go with 2 and 4 so I can make about, let's see, what is that? $510 of income. I'd be willing to own 200 shares. I'll put this trade on for my portfolio margin accounts. And I also wouldn't mind throwing this in for some income on the other accounts, but I'd probably just scale it back to a 2 and 1. So I'd buy one put, sell two puts, create the ratio spread, same price. See if I get in here for 255. So 255 is not filling. Let's go. Replace. Let's try 253 as the mid price. 253 just got filled. Okay, so 253 got filled. That's a two puts at 57.50 on the buy side, 4 puts at the 55. I'm going to do this in my PM accounts. So let's go 9732. Same thing there. Filled. This one here. Filled. This one here. 1608 shouldn't be too bad. So working at 253. Try 252. Filled. Filled. And filled. And last one, filled. Okay, so I'm going to add this in. PLTR, this is out to January 16th of 2026. Buying the 57.50 put, selling the $55 put with 2 contracts, collected $2.52 credit. Okay, not bad. And then for other accounts, plenty of cash to do the same thing. On this one, I'm just going to scale it down. So let's take this trade, scale down the quantity, and get this one in my other accounts. There we go. So be 52 buying power, 5,200, which is okay. I'm going to take that trade. So 253 not filling. Let's try 252 again. Okay. Filled. Let's go. There we go. Oh, come on. Give me a fill at 252, would you? All right, 251. So similar trade. 116 expiration. Okay, so that's going in for project options. It's going in for Pulver alerts. Get that posted here. So Palantir expired on this one. This 516. That is a ratio spread. I'm pretty sure I don't have anything left. I've taken majority of those profits. So now Palantir. Yep, these are all new trades. Okay, good. All right. So adding in 116.26 expiration, 557.50 put, sell $55 put, 252 credit. So from 50, I mean, basically from $52 and change, that would be my break even. So I don't really have any risk on the trade unless we're, you know, we'd have to drop below like $50. So the ownership price would be assigned at 55 minus 2.50 and minus 2.52. I'd own it at 49.98. Not a bad spot. If assigned, break even 49.98. Okay, so get an image there. And that's the trade. Okay, we'll have a look at it. So I'll get that one posted. All right, I'll get that posted. New trade, PLTR, 116.26 expiration. And also, if price rallies to all-time highs, I will look for profit protection at, let's say, 80% or higher max credit. So if I collected 252 on the trade, 2.52 times 0.8, I'd be grabbing over $400 of profit on a max profit of about 500 bucks. So if I get 80% or better, I'm going to take the trade off and get all the expiration and the buying power back. So works out pretty well. I mean, that gives plenty of distance. Still a little bit of elevated volatility because of the drop and because of earnings this week. So hopefully I can take advantage of that with a, pretty good timeline and a stock that's pretty resilient. Okay, let's do this. We have FOMC tomorrow. I'll share a couple of strategies I was working through. I actually did take a trade on SPY, trading a little volatility event for tomorrow's FOMC. If we go up or down, we'll see how that plays out. I'm looking to see if the SPY will move anywhere between like 4 to 5 points. I'll share that on Option Strat in just a moment. And let me get this posted here. So screenshot. There we go. Okay. Okay, trade is in. Let's try PLTR, ratio spread. Let me take a look at Spotify for a second. Shopify has earnings this week. I want to price this one out really quickly. Spotify is sitting near the highs. I've got a couple broken wing butterflies in this one that I'll be watching. This is out to June. I'd like to see some rejection off these highs. If the market pulls back, this one should be good. We get back in the middle. I should see some profit on both of these. The risk profile looks like this. And price started in the middle. Price is obviously pushed back up. We, had an earnings print that was down right in the middle. That's why I took the trade, and it quickly rallied back up, even though we missed earnings, which I thought was interesting. We missed earnings top and bottom, and somehow it's like, yeah, let's go back to all-time highs. So hopefully we're putting in a bit of a top here. So I'll watch that one. Shopify, let's price out some earnings. Also, by the way, if you'd like to join me tomorrow, tomorrow at 1 p.m. Eastern time, I'm having a live workshop, a live earnings workshop, where we're going to price out some trades together. I will have the link to that in my Telegram. So if you'd like to join me, that should be right in here. First ever live earnings workshop, Wednesday, May 7th, 1 p.m. Eastern time. If you'd like to join, here is my Telegram so I can share the link. If you're in my Telegram, then you can join me tomorrow at 1 p.m. You'll see the link get posted several times. So, Chris Pulver Telegram. There it is. And then a 1 p.m. to be Wednesday, 1 p.m. Eastern time, earnings workshop. So we'll talk through some pricing. We also have FOMC at 2 p.m. So we'll probably just tag team. Like I'll do live session at the 1 p.m. workshop. I'll look at some FOMC results. The news is going to be a nothing burger at 2 p.m. Price obviously might move, but this is basically going to be all about Powell's message. It's 96.9% chance the Fed doesn't do anything. Probability is we're going to continue to see a pause through them through June. So nothing, and then July. It's pretty appropriate that we come out of this tariff window into early July. The Fed meeting at the end of the month. We'll have, we're still going to have CPI data through next week. We'll have PPI data, we'll have PCE data, and then we go through the same thing again in June. So we're kind of sitting at like it's 56%, but kind of a toss up of like, will the Fed actually cut? According to this, they're going to cut 25 basis points, but this could potentially, shift and change in the next 30, 60 days or so. So anyway, it's a big question mark, and I just want to make sure that I'm not being greedy, calling directions and forecasts. This market could go one way or the other. Let's go to Shopify here. Shopify earnings plays. It's pretty earnings sensitive. So this would be like a little sneak peek of what we can do tomorrow together. We do have earnings May 8th before market, so this will be Thursday morning. Average earnings print is around 19%. So 0.19 times 94.50, about a $17 to $18 move on earnings. So market makers and brokers looking at the plus minus here. That's a lot of volatility. $10.65, and I'm looking at a $17, $18 move. That's way off. So volatility at 48.1 IV rank. That is crazy different. So, that makes me less likely to be a seller, more likely to be a buyer. So let me actually price this out. Let me see how many times we went to at least 19%. What's a 15% move here? So if we do a 15% move at 94.65, oops. So about a $14 move. That's still way above what it shows here for the broker on this Friday's expiration. That's really, really low. I'm hoping that's a good thing. Like it's so rare to get like a mispricing in options, but based on the ticker, based on these earnings prints, we're averaging about 19 to 20% off of earnings. It's also a fairly highly sensitive earnings play, so let's see if we get some good numbers. All right, so how many times do we get a big reaction? And sometimes it's immediate. So what I'm looking for is how many times do I at least see a move of around 15 to 20%? So this one is a no. This one is a yes. This one is a yes. This one is a yes. This one is a no. This one is a yes. This one is a no. This one is a yes. 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 Holy crap. Some of these numbers are ridiculous. Okay, and then we have some no's. If you go back deeper from like 2021, 2022 earnings, um, yeah, I mean, it's a highly sensitive stock. So what I'm thinking is if I went $10 out of the money here, 95, let me see if I can do like a 105. I'm going to go out a little bit farther though. I'm going to go out to the 16th, price this out a little bit. So we're right around $94. Let me go up to 104. I'll go 104, too wide. So that's about a 1-to-1. So if I'm right, cool. If I move this up a little bit, I mean, that's insanely cheap if I did that. So that's 45 cents to get $2. That's not bad, right? 23 cents to get $1, 45 cents to get $2, 49 cents to get $2. Like, that's not too bad. So I'm going up about 10 bucks. Let's go down to 84 and go $2 out and see what this is going to cost me. So if I did $2 wide on the debit spread, $2 wide on the debit spread, yeah, I'm going to take this trade. So opportunity here to lose one side, win one side. If we get a reaction, we're going out 10 days. Most of the time we see the expected move get hit. So hopefully I can get filled in this price. Under $1 would be great. Try to take this trade here. So 95 not filling, 96 is mid price. 96 not filling, 97. Hopefully it's not more than $1. 97 cents. Okay, that trades in. All right, so news breakers, you got a trade coming your way. Uh, 5/16 expiration. $97 debit. Expected move is plus minus 1198. Average earnings move is closer to like $14 to $17, about 15 to 20% earnings average. This is $10 out of the money. Looking for price to hit an expected move. Okay, trade is in. Updating the tracker here. $5/16 expiration. That was filled at 97. Yep, 97 cent debit. Okay, trades in. Okay, trade on Shopify. There it is. Newsbreakers. Okay, let's go to this chart here. Shopify. I'm looking for price at a break even of 96 cents. I need to see price get up above. We're looking for price to get around 105. So anything above 105 is good, and anything below 83 is good. There. So above 105 and below 83. And we'll see if we get ourselves a little reaction. Okay, what other earnings do we have coming up? decent list. So Shopify, adding to the highlighter here. I priced out a bunch of other ones today. I didn't really love them. Crocs is fairly sensitive. I might take a look at that one. Yeah, let's price out some Crocs. Crocs is May 8th, so I still have some time. I'm going to save a couple of these for tomorrow's workshop, but I'll look at Crocs right now. So earnings average around probably 14-15%. And do we get a big old retail reaction? Okay, so we hit it, we do not, we get there, we do not, close but no cigar, we get there, get there, and they're close. It's pretty consistent on Crocs, making some decent pushes. Okay, so I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 yeses. So 10 times it hits the expected move. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 no's. Well, that's a toss-up. So never mind. I'd like to see a little bit of an edge. If I get like 60, 65, 70% of the time hitting the expected move, then I'll likely get long options on that one. But if it's a 50-50, then it's literally like a coin flip, and I don't love that. What else? DraftKings. Oops, DKNG. There we go. DraftKings at 33. I mean, I like that price to sales. I like that fair value. Holy shnikes, man. That is crazy cheap. Wow. I wonder. We have earnings this week. Summer 2024 lows. This year's April 7 low. Are we fairly well supported around that $30 handle? Maybe. I mean, I do wonder. Just had closing bell. I do wonder. Let me check on my SPX trade. I'll come back to DraftKings in a second. SPX trade this morning. So this trade, son of a biscuit. If anybody was in my daily profit play, right now you're able to get about 250, 255 to close out that 285 credit. So if I waited towards the end of the day, that would have been just a little bit more profit. We'll tackle a new daily profit play tomorrow. All right, let's have a deep dive here into Michael Anthony, my Pfizer robot. What's up? DraftKings 33.58. Well, I can't take the trade now, but this is earnings. When? Earnings Thursday. All right. So I might put DraftKings on the list. So shop, check, DKNG, check, OXY. So this one is done. OXY for tomorrow. APP, UPST, and Bill are all in. Still watching Amazon and Hood. See if the Fed shakes things up a little bit to get some expected moves hit tomorrow. Currency strength on the day. Japanese yen on the upside, followed by New Zealand and pound. Dollar and Swiss are the weakest currencies. Doesn't bother me at all watching the Swiss get weaker. Let's check gold really quickly. Gold still had a pretty strong 2-day push, but it is nice to see that the Swiss franc has got a little bit weaker considering gold is up. We'll see what happens. I mean, I'd still I'm not buying at these shallow retracements. I know I've got a lot of traders that are active in gold and maybe grabbing some scalps here. It's not my style. So I think that gold, if we hit these highs, maybe it's divergent. I just don't want to be buying into all-time highs. So I would prefer, and I'm patiently waiting. I've been in gold long for the last 3, 4 years. Bigger breakouts, adding to positions, and I'm just waiting for an opportunity to see, do we have a meaningful correction, or we have a bubble. And I don't know. If it's a bubble, I'm just going to trail stop losses and try to make as much money as I can. If we have a correction, then I'm going to be adding more position for longer term exposure. I've said this before, but I still like silver as a better technical trade. Silver had a nice 2-day rip as well. Let's see if we can get silver back above 34.84, break these basically $35 highs. Even if we have a channel, maybe some resistance around $41, but I'm looking bigger picture like the 2011 high, the 1980 high around $48 on silver. So I still like it. Bitcoin at 94.9, just kind of hanging out. I wouldn't be terribly surprised to see Bitcoin maybe go sideways, maybe break down, find some support in here, and then have a swing trade back up. So I'm looking for maybe a dip around the 80, 84 to 87 zone, maybe a retest of the lows. Probably less likely to revisit lows, but I think this would be a good swing trade. If you set this up for a swing trade, there's your risk, there's your reward, about a 2 to 1, not bad. Gold miners, I don't like any of them. I don't trade gold miners because their spot price is crap compared to gold. So, I mean, look at, if you compare gold miners to gold, this goes back to 2022. I'm going to go to the bottom of 2022. GDX is up about 143%. Okay, I mean that's impressive. Annualize this out over about 2.5 years. So 143 divided by 2.5. That's a pretty good run. Go to gold since the bottom of 2022. Gold's up 117. So miners in a way outperformed. So F, what I do with GDX. But I think the asymmetry is more in the junior mining space. It's just higher risk, it's less liquidity, which is why I don't trade it that much. GDX was a good buy in the 30s, and that's about it. If you're looking to get a dip on miners, then take the trend line, look for a pullback into some EMAs, and I would say, pulling back into this area looks like a nice opportunity to get long. But I'm not going to buy highs. Okay. Driven by China's latest gold investment. I mean, sure. Okay. I mean, it's no secret. China's been buying gold for years and has been more vocal about it. Trying to be stealth, but now it's becoming a crowded trade. So, yeah, I mean, look, melting up gold is fine. If it goes up, fine. If it's a bubble, fine. I'll trail stop losses. But I can't justify buying gold at these highs when I know that we have a 400 plus bar count that's likely to have a 15 to 20% correction. I'm not going to buy it. So I'm going to watch it, and if it melts up another $500 an ounce, $1,000 an ounce, starts to get into ridiculous territory, then I'll probably just trail stop losses so I don't get burned on our correction. Bitcoin, yeah, like I said, still watching. MicroStrategy back up to 385. Coin just I was looking at some income trades here, but we have earnings this week on Coinbase, so I'll watch. Copper, choppy. 6J is Japanese yen. This is the inverse of the dollar yen essentially. The Nikkei still making a comeback. FXY is the Japanese yen. I still own shares of this. EWJ is up to some fresh highs. I'd like to see this thing breach 73 and keep going. I measured this move out this morning, potentially a double bottom. If this low and this low create a move to the center high, is it possible that we have a measured fulfillment around 82.94? So that would be my price target. If I'm going to hold long, which I am, I purchased a chunk of shares here and a chunk of shares here. There's my break even. If I can get this upside, I mean, that's pretty good for a dollar cost allocation. Yeah, I mean, that's not a surprise, Lee. It's literally been the story for the last 6 to 12 months. I don't like miners. I said that. GDX, if it pulls back with a spot price of gold, so be it. Good opportunity. Um, Look, mining gold is expensive. Projects are expensive. The probability of making money on a project is slim to none. I mean, the nice thing is they all have gold on their balance sheets, and gold is appreciating like crazy, and that's where the catch-up trade comes in. Miners have been, underperforming for a while based on the spot price of gold, and they played catch-up very quickly. But I'm gonna wait for a dip. I'm gonna wait for a pullback. I'm not tossing money at highs. Okay, China had a pretty good run today, up 1.34%. This is HSI. Brazil flat. Latin America actually up on the day at 0.85%. Mags down about 0.82%. Mag 7 earnings are done. We still have some gaps and some backfills to do here if the market's going to pull back on Mags, maybe pull back here on Mags. I mean, honestly, I wouldn't mind having some decent Mag exposure if we're down into 40 bucks. I also wonder here, like the reality of this ETF. I mean, how long does it take until the Mag 7 is no longer the Mag 7? Right? It used to be Fang stocks, then it was Fang Man, then it was Fang T Man, now it's Mag 7. Now you put in Broadcom, so it's Mag 8, Magnificent 8, or whatever. They're all changing every single year. But knowing that, I mean, honestly, if I were to pick, it's like I'd like to see if there's an ETF that's like, give me Meta, give me Microsoft, maybe Google, and that's about it. Like, honestly, if I'm trading like cloud infrastructure, maybe Amazon. I think Amazon's good. But if I could avoid Nvidia and China right now, like Nvidia and Apple, to kind of get out of the potential, the fallout zone of China. Like if there's any backlash or there's any failed trade deals, then I think Nvidia and Apple could be the ones that struggle as far as Mag 7 goes. So I don't mind, I don't mind getting some Mag 7 here. I don't mind getting some Mag 7 here, but this also could be what drags the market up with a bigger melt up. This would also be the thing that drags the market down. Am I staying on pharmaceuticals? No. I mean, my exposure is J&J. So I mean, I've got J&J exposure, which is not all pharmaceuticals. It's a little bit everything, but also Pfizer. Pfizer with a big drop today. Eli Lilly was hit pretty hard today. So I mean, Pfizer's about my biggest exposure to pharma. But like biotech and no thanks. So I mean, Pfizer, yeah, it's just a struggle bus. So I wait. I mean, I look back to, we're below COVID lows, we're below 2024 lows, we're back to 2014 lows, for crying out loud. I mean, I don't know what Pfizer has to do to turn the corner, but I mean, I do like the fundamental side. I just think they need to kind of change their product offering. And I don't even know what the extent is of like pharma tariffs. Are we doing it to bring prices down? Because that's probably not going to help. Are we doing it so you have to buy pharmaceuticals within the U.S.? I don't know if this is good or bad, but obviously stocks are dropping. It's not a good thing. So, way below estimated value. Still, price to earnings is dirt cheap, which I'm happy with. Fair value $70. I'm happy to make this thing back up to like $30. I'm not looking for a crazy run in Pfizer. Yeah, it doesn't matter if sentiment's down, Michael. If sentiment's down, I mean, Pfizer can go back to lows at 21. Pfizer can go sub 20. You look left on the chart. This stock has been trading during the Great Financial Crisis. We were down to $12. Now, bigger picture, yeah, if we were here and all the way down here, I'm going to take another position on Pfizer. I don't think this is a company that fails. I mean, realistically, if we give this like 6 to 12 months, are we here with a pattern? Do we have a price pattern that can emerge and we can, measure something that gets us into 30s or 40s? Well, sure. But you're kind of calling a bottom, which there's no end in sight. So I'm going to wait. I've got some exposure. I've got some calendar spreads. Diagonal spreads are going out to summer of next year. So I'm hoping Pfizer can turn a corner, but time will tell. All right. Currency strength wise, again, real quick, Swiss and dollar were weaker. Everything else kind of jumbled. Japanese yen on top. Tomorrow's news. Let me go to FOREX Factory for tomorrow. So we have unemployment news coming out of New Zealand today. Tomorrow is light across the board except for the Fed funds rate, which is a pause expected with the press conference at 2:30 p.m. with Jerome Powell. So tomorrow from me, I will have a 1 p.m. Eastern Time earnings workshop. 2 p.m. will be FOMC release. And then 2:30 is Powell press conference. And 3 p.m. will be final hour session. So depending on how long we get through the earnings workshop, we might just combine it, where I do like an earnings workshop, jump into an FOMC session, just see what the reaction is. And then it's kind of it's just a wait and see. I mean, the market will probably be pretty calm. Usually FOMC days are pretty chill. And then things get really exciting, and like the expected moves are hit, tops and bottoms are hit. It's a noisy day. 2 p.m. to 4 p.m. is usually when kind of the fireworks take off. So I do have a trade that I'm watching right here. I put in the SPY this morning. So SPY, this trade. So I did a double calendar spread on the SPY. We're trading at 558, which is essentially where we started the day. I sold a 564 call, so about $6, about $5 or $6 above price, and about $5 below price. I sold a put. Here's what the trade looks like. I'm see if it will show analysis. It kind of does. It's actually a little bit easier to build this out on option strat. So let me go into let's go SPY. SPY. Here it is. So this is the trade that I built out for tomorrow. So what I'm looking for is, so I took the trade today, and the expiration is I've got a 7th and 8th. So I'm looking for any type of volatility tomorrow. So we get into May 7th, start in the morning. If price is pretty chill tomorrow, so let's get into like opening bell. Okay, opening bell tomorrow, around 9:30. My little debit of about 26, 27 cents could potentially be showing, I don't know, maybe 60, 70, $80 of profit. Let me take the range down a little bit. So that's what the trade looks like. Now, max profit, we go to SPY tomorrow. Tomorrow's expiration, looking at about a 23.3 IV. So 23.3 IV. This could all change in the morning. But coming into opening bell, if price is around the same level as what we're closing out today, then this trade is looking pretty good for a quick profit in the morning. If it is a gap high or gap lower, then that might shift things a little bit. But by the end of the day, I have a potential profit trap where I could turn a $27 debit into about $120, $130 credit. So that's a 3-to-1, 4-to-1, 5-to-1 potential trade. But I got to hold that all the way to the end of the day, which is going to be unlikely. But if we just stay in a bit of a range here, my sell side helps to make about 100% profit. So hopefully that is the case for tomorrow. So I'll check that out in the morning. SMCI, yeah, I priced that one out. I didn't take a trade on it. It didn't price out the right way. We have earnings coming. It's not yet. They are today after market. Nothing happened. We don't have the official SMCI yet. So it's post market is down a little bit. It's down about $1.60. But expected move going into SMCI for Friday was only a couple of bucks. So earnings today after market going into Friday's expiration, you're looking at about a $3.76 move. So just the option chain alone is a little tricky. So I did not take SMCI. Okay. All right. Any other questions? Overall market. Let's do just a quick heat map check. So we had about 62% of stocks declining today. Pharmaceuticals were probably leading the decline. So UNH down, Eli Lilly down, AbbVie down, Merck down, Gilead down, Pfizer down, Bristol Myers Squibb down. Yep. So we've got Healthcare down. Healthcare plans down. That sector was hit pretty hard today. Eli Lilly, did they have earnings this week? I think they already had earnings. Yeah, they had earnings last week. So just a big range trade. I mean, look, Eli Lilly, would I be comfortable buying some? Not right now, but I mean, if we come down to this is a weekly chart, but if we come back down to support in here, then sure, maybe, right? If we come back down to revisit April lows at 707, if we come down to a yearly moving average, we come down to a big swing fib. I mean, go from a low to a high. This is just a monster trade, but we did pull back to the 30%. We're trying to get back to this high again. So if it tests the lows, I mean, here's a 382 pullback zone around 650. Here's a 50 pullback zone around 550. It's like there are trades to be considered. It's just a very expensive stock to trade. So, I mean, if I like it enough, the dollar cost average into it, I would say, okay, if we revisit lows, I'll put $1,000 at it. We come down to a 38%, I'll put $1,000 at it. We come down to the 50%, we put $1,000 at it. So, a 3K position, and then it goes up to highs. What would that look like as far as return? About a 55% return on 3K. It's like that's good. I would take that trade, but I'm not going to take part in something that's gone exponential and is now just maybe a chop trade. So we come down low enough, I'll consider buying support. Okay, silver. Yeah, we did silver. Silver, I like a lot. I want to see silver. I think we've got a lot of support here at 29. We have a lot of support here at 26. What I'd like to see silver do is break this top. We break this top, it is pretty much open space to the upside, which I like. My target on silver is minimum target is $40. Max target for me is about 49. As far as what I can measure and what I can see, I mean, could we have some crazy bubble in silver? Maybe, but I'd be happy going back to 14-year highs or 40-plus-year highs if we get to almost $50 an ounce. But for that to happen, we'll see if we can break this resistance. If silver gets into this upper level, then expect the gold versus silver ratio to change. Right now, gold is way, way, way higher on the ratio than silver. So if we see a flip of that ratio, then I think silver can, catch a bid and kind of play catch up, which would be nice. MAT, Mattel, toy makers. I don't know. Are they affected by stuff coming out of China? I don't know. This is what I'd be looking at. So that's fundamentally like kind of looks pretty strong. It's cheap, fair value. Wow. Acushnet Holdings, that's a freaking golf company. Hasbro, okay, fine. Polaris, the makers of snowmobiles, like what an odd group of peers. But earnings were okay. EPS is printing negative, but I don't know. Here's what I will say. If it comes back down to levels like this that are ridiculously attractive, then sure, I'll go long Mattel. $12, $11, $10. I think that's a buy and hold. At this price, I mean, this does look like a pretty good bullish pattern. You're kind of guessing where the lows are. But I think if you're willing to say, okay, one chunk of shares here, and then a revisit of any of these lows for a second chunk of shares, it's not super expensive to potentially see some upside. What I don't know is how much of this is going to be, affected by China. How many pieces, how many toys are made in China? Let me see. Let's see if there's any like major news. Let's go to heat map here. Let's go MAT, Mattel. Any major news on trade war stuff? Tariff-free toys, but they could benefit from tariffs too. Why Mattel stock was climbing today. Attractive and undervalued. These are all today. Barbie's about to feel a tariff burn. Yeah. All right. Anyway, um, it's not awful. It's not awful. I would say if I wanted to trade it, two ways. One is I just buy shares and don't think about it, or the other one is I trade something like this, like a deep in the money call. Instead of allocating, $1,600 to buy 100 shares, I just buy a deep in the money call for 800 bucks. So if I bought two of these and I sold them at the money, so this would be down one. So for $1,100, I get a synthetic. It's kind of like a synthetic long, where I can tie up about $1,100 versus $1,600. So this isn't a bad trade. If price goes up, it's like I own the shares. So if it goes back up to 21 and change, goes up to 25 and change, there's a pretty good return there. Otherwise, I would just you know, buy shares here, be willing to allocate about, it'd be $1,600 and down to about $10. I'd allocate $2,600. $2,600 for a potential, you know, 75 to 100% move wouldn't be bad. Am I coming back to all-time highs on, maybe. Yeah. So I'm going to put it on the list. I'm not going to take it's closing bell, so I'm not going to take the trade, but I don't mind looking at a trade. Option wise, 2027 is okay, but if I don't want to worry about time, then I would just buy shares and then buy shares again. And I want to see, option wise. So we have monthly options, which means it doesn't give me a lot of freedom to work within the context of the trade. So, for example, if I bought shares and then try to sell a call, I'm going between 30 to 45 days out. You're getting, a dollar in the money, 60 cents at the money. So you're not going to generate a bunch of premium on it. Is there a dividend play here? Nope, there's zero dividend. So you're looking at this just has to grow. Hmm, $10. Honestly, I'd almost rather just put a buy level in at $10 and just not even worry about it. Allocate $1,000 to it. If it goes up from 10 to 25, you double your money. So anyway, I'll look at that tomorrow. All right, I'm gonna go. Just after 4 p.m. Sorry for the late start today. Just got tied up with some other stuff, but still knocked out about an hour worth of final hour. Tomorrow, 1 p.m. workshop. So if you want to join my Telegram channel, which I posted earlier, Telegram channel, 1 p.m. Eastern time, you'll see this link pop up again. Let me see if I can. Here's the earnings workshop. If you'd like to register for this, then go for it. 1 p.m. workshop, Wednesday. There's the link for it, and then we'll kind of carry that over into FOMC at 2 p.m. Why is the recessionary talk without the macros backing it up? I don't know if you can say that, Lee. I think that macros do back it up. You listen to any macro analyst, they're talking about how weak the U.S. is and how they're slowing growth, and there's a lot of stuff right now that are just, look, man, this is the market. The market right now is just this. Nobody knows. That's the truth. Nobody knows. I think that if as long as Trump doesn't do anything crazy, um, meaning like if he doesn't do something that's literally going to break something, then the market will probably be fine. You know, but I am surprised. Like this, look, we had zero tariff talks for about 2 to 3 weeks, and what did the market do? It rallied the entire time. What's he doing today? Tariffs on pharma, tariffs on Hollywood, tariffs on toys. Kids only need 3 dolls. It's just like, shut up. So if the dust is going to settle, I think the market is resilient enough and just wanting desperately to like have the evidence say that we can go higher because earnings are pretty good. The economy is resilient. Unemployment is still steady. But if we try to like talk this trade war stuff again, it's like the market's not going to like it. So, it's like we have such a wide dispersion of where this market can go this year. Like it's anybody's guess. So anyway, I'm sitting in a lot of cash. I'm pretty diversified. I've got hedges on. A melt up is fine. I'm not aggressive. Like if the market goes up, I'm not aggressive. I'm just not. Like if it proves like, yeah, I can define risk trade there, but I'm basically trading like pretty safe income trades down here. If we get a pullback, then I'm looking at some dips, maybe at like a right shoulder opportunity, and that would be the one chance for buyers to come back in. Yep, that's a great point, Jonathan. What if shelves get scarce and panic? That's true. I don't know if that's going to help Mattel. I mean, I was looking at the stock. It's like if shelves are bare, I don't think that makes the stock price go up. I think that's a huge concern, right? And that's the stuff we don't know. Like in June or July, if we have empty shelves with retailers, that's a huge concern. Look, full transparency. The last couple of weeks, I do some stuff in the golf business, and custom fit clubs and do some lessons, and many of the manufacturers right now TaylorMade back ordered on shafts. It's not TaylorMade like heads, but it's shaft companies, which are all third parties. But they are the assembly makers for, like, if you want to complete a set, you got to have a grip, a shaft, a club head, and I've had multiple orders in the last 2 weeks that have been delayed by 2, 3, 4 weeks. We had Mizuno, which make parts like club heads out of Japan. They just retired like 8 of their club heads because they don't have them in stock anymore. So there's definitely stuff happening. Inventory and all this is this a supply chain disruption? I don't know if this is good or bad, right? You disrupt the supply chain, prices go up. That is inflationary. So, but I don't know how bad it gets. And I'm not going to pretend like I know where this thing is going. It's like I want to brace for some downside just in case we get it. I think the market can still offer up some buying opportunities. I think Trump and the administration would be stupid if they're going to let this market drop below 4,800. I could see the market being noisy in here, and the dust has to settle into July. But if we have a chance to like kind of buy some equal lows, and then the market gets to all-time highs for the year, like I'd love to have that trade. For the second half of the year, I'd love to have this trade. My least favorite trade would be that right now, even through all this tariff noise and uncertainty, that the market still melts up to all-time highs. I would kind of hate that trade because I don't feel like I can participate. I was very active down here, got a lot of profit, but I'm not trying to play games with like all these technical resistance levels. And furthermore, how many stocks are below the 200 moving average? Still about 59% of them. So where is my here? Okay. Still about 59% of stocks are below the 200 moving average. So technically speaking, the broader market, 500 stocks, still in a bear market below the 200 moving average. Now we could catch up to it. We could hit it. Is it going to be resistance? Is it going to be a new buy zone? But this is why I'm not super bullish on anything. Okay. All right. Sounds good. All right. I'll let you go for today. Come back and do it again tomorrow. 1 p.m. workshop. We'll parlay that into FOMC at 2 p.m. and then we'll final hour at the end of the day. Have a good rest of the day. See you tomorrow. Thanks. Bye.